but sometimes you can't adjust. And that's what I want to talk about today. And I'm going to talk about two types. I'm talking about stock. And I'm also going to talk about options. And what if the stock does drop? What can you do? And this is what we call our SOS trade. SOS stands for stock option spread, because I'm going to lay a spread on top of my current stock position, and I'm going to do it for free.
This is the How to Trade Stocks and Options podcast, brought to you by 10MinuteStockTrader.com, where we cover finance, stocks, options, entrepreneurship, education, and money. And here's your host, voted one of the top 100 people in finance, Christopher Ewell. Hey there, traders. Welcome back to today's How to Trade Stocks and Options podcast. Today, we have a special lesson for you. I'm putting it here on the podcast because I really believe that this is going to provide you massive, massive value. And that's what I'm trying to do here. And hey, listen, if this podcast was useful to you at all, I really highly suggest that you go check out the full trading course at AIStockTradingSystem.com. That's AIStockTradingSystem.com. Hey, make sure you subscribe and hit the bell so you'll be notified every time we give you more tools, tips, and tricks to help you trade faster and trade smarter every single week. Hey there, traders. Welcome back to today's How to Trade Stocks Options podcast. Today we have two special guests online, Chris Mercer and Rance Masheck. Both of them are the founders of MarketGear.com, and this is a special sponsored episode. We want to make sure you head on over to MarketGear.com/Chris Ewell, that's me, and check out their Market Gear platform. You're going to get 2 weeks for free and 50% off your first month of the Market Gear platform, which is pretty amazing, honestly. Every time Rance comes on and shows me something, I'm like, wow, I didn't know you could do that. So, guys, thanks for coming back on the show today. I'm interested to learn more, because you're telling me that whenever I place an options trade, there's actually ways to fix the trade.
Oh, not only options. I'm going to show you how to fix a stock, too.
You can't do that, right? You can only buy or sell. Is there really a way to repair it?
There is.
Magic wand. There's a magic wand.
Where's my Harry Potter magic wand from Universal Studios? Exactly. Where we can, interact with all the things there. I keep it real nerdy at my house. I mean, I've shown them before. I got Stormtrooper helmets and Star Wars and Harry Potter stuff all over the place. So I'm up for it.
There's a whole stack of wands right over here from a collection of the different Harry Potter ones sometimes.
Perfect. Yeah. All right, guys. So tell me, pull out the magic wands and show me some magic here. I'm actually really excited to learn this. Rance was asking me before what kind of strategies I use, and I was like, I just keep it really simple. Just sell and put spreads. I mean, but I got to tell you, I'm going to be doing a lot more out of the money call spreads, like you and I talked about last time. That's another thing on my radar.
It's a difference of it's a little bit of a different risk thing, but it's also the reward thing, right? So to put spread, you have a pretty limited gain to your risk thing, and the other way you get a much greater gain potential, but it has to move, right? So we were talking about riding the trend. Today we're going to talk about what happens when you're wrong with that trend, right? What happens if it goes different than you thought it was going to go, and what a lot of people do, Well, we're going to talk about what a lot of people do, and we're also going to talk about what you can do instead. So that's going to be kind of cool.
Let me ask you this. So I'm a firm believer of if you're going up with the trend, following the trend with put spreads and things like that, that's kind of my MO. But let's say the trend breaks, right? At that point, I get out. Are you suggesting maybe we do something else besides exit?
So let me ask you, have you ever had times where, you're in a stock? And I'm going to talk about, let's keep it simple at first. I want to talk about just a stock purchase, and then I'm going to get into options, right? Sure. But you're in a stock, and let me ask you, have you ever been really good at picking the top? I mean, like, right, right there, and you buy it, right? And then there's this pullback, right? I've been there a bunch of times.
Yeah, right? I think I've probably been there a couple of times too, I'm sure.
Yeah, it's like it's one of those that it can bite you, right? It can happen. And so if in a case like this where you're seeing this thing going up and you get into it and there's a pullback, maybe not right when you get in, but you're right, and it pulls back and you didn't get out. So one of the things you can do is you can cut your losses, right? You get out. Mm-hmm. But if it's pulled back and now you feel like, okay, that's done. We really have, there's reasons why now we really feel like it's going to be continuing to go higher. It's, it might be earnings, might be whatever it is that you think from this point, there's a chance to go higher. But in the meantime, you have to have it move up quite a bit, back to where you bought it to be at break even.
Right.
And I'm going to show you how to have it go half that move and get back to break even. right? So
Okay.
it goes back up half that. I'll show you, and I'm going to show you that. So let me jump in and let me share my screen here real quick.
Do you think all the people who bought GameStop at 500 can use this, or is it too late for that?
It's a little too late for that. I'll tell you what. I think that the GameStop thing is it's interesting. It's not the normal market. I will tell you that I don't know that this is the right strategy for that. Although I hadn't tried to price it on that, but it's something that actually be interesting to price on. But this is in a situation where we're talking about something like, in fact, in my example here, am I sharing? You seeing that? Do we do it right? Okay, cool. So first of all, I just want to make a quick comment here about this because we're going to get into some examples here, and these are real examples and that. But anything I share today is educational. There's nothing here that should be construed as any kind of a recommendation for a specific position in the market, right? So what happens if your outlook changes, and what can you do with that? Well, what most people will do is write it out. Which is, you've probably heard this saying before, but what turns a short-term trade into a long-term investment faster than the stock going in the wrong direction, right?
Yeah, absolutely.
Right. And so people end up holding it way too long. They don't cut their losses, and and they end up in a bad situation. Not necessarily the right way to go unless you have a real good reason to write it out. But that which brings us to the second one. Sometimes the answer is cut your losses. But sometimes you can't adjust. And that's what I want to talk about today. And I'm going to talk about two types. I'm talking about stock. I'm also going to talk about options. And what if the stock does drop? What can you do? And this is what we call our SOS trade. SOS stands for stock option spread, because I'm going to lay a spread on top of my current stock position, and I'm going to do it for free. And
wait. Free. You said free,
I
right?
did say free.
Did the mic go out or something? Did you say free?
I said free. We're going to show you how to do a repair that won't even cost you to do.
Do you need at least 100 shares to do this?
You do need, that is a very important point there. Thank you for bringing that up, because you do need 100 shares. Options are traded in contracts, and the contracts control 100 shares of stock. So if you're going to match it up to that, you're going to need to be matched with that scenario, that situation.
Okay.
All right.
Sure.
So let me just share with you. This was a trade I did on Zoom, and this was my entry date. This comes from one of the cool things about our platform is it tracks all of your activity with a specific stock and what your profitability is and all that. Our journaling thing, and one of the things that will do is it will put on here when you. In fact, actually, here you can see. I opened a trade here and I closed it here. It shows a green line, which means I made money on the trade. And if I hover on this, I can see what it was and how much I made.
And it does that automatically when you log the trade?
Automatically. Just
wow, that's great. That's really cool, Rance. I actually do that myself manually on another platform. How cool.
Yeah. Just to be clear, Chris, you don't have to log the trade. It does the whole thing for you. And it tags what type of trade it was. It knows everything.
That is correct. Yep.
Rance pull the journal back up and show the hashtag.
Hang on. I mean, you really are talking some magic here. You don't have to do anything.
No, it's completely auto journaling. I'm going to go to the full journals thing for just a second. Let me just show you.
This is not like fake surprise here, folks. This is like legit surprise. I didn't know you could do that.
So what this has in it, let me go to Life of Trade because it's kind of a better way to view it. So what this will do, I have all my accounts over here on the left. I have a bunch of accounts, and more than most people have, because some of this is for testing and that. And let me go down to where we have some closed out. All right. So all of these that have a number on the right here, this shows me here that I bought. This is a closed out trade. I bought it on 6/15, closed it on 9/18. It was in it for 95 days, and I made $4,000 on it. If I click on that, I can go see exactly what those positions are. I can even go in and see what my fills were and any notes that I did on this. The system, not only does it journal automatically, it automatically identifies the type of trade you're doing. If it's an options trade, we identify nearly 80 different option strategies in the platform.
We're 80 option strategies.
Yeah, there you go. You got double diagonals and broken wing butterflies and all these little fancy things along with your standards, your long call or your bull calls or whatever. And then what happens with any trade you do, you can add tags to the trade. And so it'll automatically tag the strategy, but you can add whatever other tag you want. And then what it will do is it will track every one of those trades you did. So, if I look at here, the here's the bull put. Now, this is a demo account, so I got to tell you that I'm not. If I brought up a different one, you'd see a lot better results on this. But let me just show you. Here's my bull puts. We were talking about that type of trade, right? So I've done 14 bull puts. I've won 78% of the time. Average trade's 26 days, and that's not particularly exciting, but I've made on average $27 a trade. If I brought up my normal account, you'd see a lot more interesting on it. But it shows you here exactly, what I've done. I've done 9 just long calls. Average ones made $1,200. Average time in trade 71 days. And you know what? Average trade's $1,200 profit. I've only won 33% of the time, but I'm still making the money on it because of the nature of how I do it. And then down at the bottom, I'll keep track of the whole thing for you, and show you here that I've done 127 trades, 158% of the time. Average trades 120 days. Average profit, and then total profit for the window of time. You can adjust all sorts of things. You can look at specific accounts. You can look at specific time frames. I can go dive into certain tags, and then it also graphs all this stuff out for me so that I can see how my portfolio has grown, what my win-loss ratios are, and all that stuff, all completely automatic just by trading through the platform. So it's a very powerful piece of.
So what brokers does this integrate with?
So we have TD Ameritrade, and of course, with them going with Schwab, it's going to come together. We got E-Trade, Choice Trade, Trading Block. There are quite a few of the main ones out there, and we're also in discussions to bring a few more on as well. And by the way, even if you have an account that it's not supported by the platform yet, you can still log it. Now you do have to go in and tell it, but there's a real easy method to be able to log trades you did at a firm that we're not connected to.
Well, I mean, even if you do have to log it, I am a huge advocate of tracking your trades. Yep. I mean, like I do that on every single trade. I tell anyone I work with, you have to log every trade. Number one, if it will help you so much as a trader to realize this is working when that's not working, which is one of the reasons why I've gone down to such a simple strategy. Because at one point I actually thought that iron condors were my thing, right? I was like slapping iron condors on every day of the week and not taking into account trend trading at all. And then I at the end of the year looked at my portfolio and I saw that 90% of the dollars that I lost came from iron condors. And I'm like, why in the world am I doing these? Like, that's a terrible idea. And I would not have realized that had I not kept track of my trades along the way. So I think that's fantastic. Right?
It is. And when the thing is, if you do track it that way, let's say you do it, an Excel spreadsheet or a Google Doc, whatever, it's still, how are you going to extrapolate out all that information? It still works. Right? It's still work. You have to get, become a spreadsheet expert to go figure all that out. Where this, it's a little form to put in the trade. It looks exactly like a trade ticket. You just put it in there. If it's connected with us, it's automatic anyway. And then it's going to do all this research for you automatically, and you can go do all sorts of things to go work through that. So it's a pretty cool little process. I gotta tell you,
I actually am a spreadsheet expert, certified. I took 4 exams. Microsoft Office Specialist Master. I am a certified spreadsheet nerd from a previous life. So yeah, I got to tell you, for somebody else, this is probably going to be a lot easier.
Right. And it's just, it really does work really well. And it's something that when you put a trade on, the only thing that you need to do when you put a trade on is if there's anything, we don't have time to get into it today. I'll tell you what, if you want to do a thing on journaling, whether it's on our platform, you're doing it, a spreadsheet, whatever, I'd love to do a session on that because there are some real important things that we've learned in the years of doing this that's important to journal and how it's going to impact your results long term. And would love to share that with you guys.
The biggest thing to us was just, most brokers, all brokers obviously give you a report, right? You can run a P&L report. Well, that's not really going to give you the information you need to figure out where you're really making money. It's just not enough. And so what we really wanted to focus on was how do we give you a quick visual that can, think about it. Even when he's just looking at the tags page here, you can see long calls and all these, and you can just look at them and go, okay, what am I not making money on? It's that simple. Maybe I should just stop doing that at all. And then we're done. Like that's it. Right. So that's what we were going for.
And by the way, the other thing about this is that if you do a trade from one of the scans inside the platform, it also automatically tags it, not only what the strategy is, but what scan you use to find it.
Hey, that's cool.
Yeah, little things like that. So pretty cool little parts to that. But let me jump back in here as we're talking about this.
Show us how we adjust things.
All right. So if so I'm going to look at Zoom here, and I'm going to go into my position here on Zoom. And there's a couple things that we can do that will, let me make sure.
So this would in theory be, I hold 100 shares of Zoom. It's gone down. I don't know what to do. Well, no, I take that back. I do know what to do because Rance is about to teach me, right?
Right.
Gotcha.
So if you look at this, by the way, this is I didn't have it on for just a moment ago, but this is when you're trading through the platform, it will show you your cost basis right here. That line across this, that's where I bought the stock at.
Oh, cool.
Right? So I get to see that too, right?
It's like everything I do manually, you do automatically.
Right there, right? So so now I go in and I look at this. Well, I'm going to see how I can adjust that and work this. So I want to figure out how I can get to profit quicker. Now, so what I'm going to take, the outlook here, I'm going to take is I still expect it to go up from here. Now, we'll just take a look at this. I'm not, we got a support level. We'll see. For our example, I'm not making a judgment. I'm using Zoom as the example here. I'm not making a judgment call that I think it's going to go up. I'm just going to show you how to use it with this because I have.
You're just saying there's a bullish case for Zoom
there's
in
a
your
bullish
mind
case for
as an
Zoom.
investor.
What could I do? Right.
Right.
So where would the stock have to go for me to get back to break even? It's at 367 today. I bought it at 451. It would have to go back up to 451 for me to be able to profit.
Yeah.
Right. If I'm just holding the stock. So what we're going to do is something a little different. So
and you're losing sleep at night because that's $100 move on 100 shares. So
right.
Yeah.
Right?
I mean, you're wondering like, did you make the right move? I'm not really sure. I'm down 10 grand on the trade. What can I do, Rance?
Right. So what we're going to do here is we're going to come in and now I'm going to tell you there's a couple. Well, you'll see it as I do this. So what I'm going to do is I'm going to go look at buying an at the money option. Right now,
kind of option? Call or put?
Call option, an at the money call option. So right now the stock's at 366 and change. So I'm going to go with the 367.50.
Okay,
that's $28. I need to pay for that to do this trade. How am I going to pay for it? I'm going to sell 2 of another option.
Okay.
So what I'm going to do to figure that out? Really simple. I'm going to take that 28.10 and divide that by 2. That's $14.50. I need to bring in $14.50. So I go look at this. Where can I bring in $14.50? I can bring in $14.50 by selling the 397.
Okay.
You with me?
Yeah.
Right.
So we're selling a call spread.
I'm selling a call spread. Well, no. I'm buying a bull call spread. That's what I bought the 28, the 367
right. Okay.
for 28.
Okay.
And then I'm selling the 397
so
for
we're buying
14,
an at the money call spread. Okay.
Right. And then selling that. But what I'm going to do is I'm going to sell it twice.
And you're going to sell a naked call with it.
Well, am I naked?
No, because you have the stock.
Man, I'll tell you what, that was, you talk about how, that's exactly right. You talk about, I try to keep it simple. You see it right away, right? I'm doing the call spread and that's going to cost me money. I'm paying for that by selling another call against the stock I own.
So you're doing a covered call, an out of the money covered call with a full call spread. Okay.
Yep. Conceptually,
I grasp. Okay.
Yep. Debit call vertical, right? So now if you look at my risk graph over here, there's a problem. My problem is I never got above the break-even line.
No.
You see this, right? So you know what I should have done?
Does that help me at all?
Well, it helps you. It helps you. Let me do something real quick. I'm going to clear this because I want to take a snapshot of the stock, right? Because I want us to compare it to the stock itself and see where we happen here. So now I'm going to go out and do that same thing again, do that, and do the
so we're selling an at the money bull call spread.
Right. Yep. Or buying an at the money bull call spread and selling extra call, whatever call I sold on the bull call spread, I'm going to do that. But here's my problem. That break even line's up here. I'm down here. I want to get to that break even line. How do I do this? Now I start rolling the whole position up. So instead of doing the at the money, I'm going to do slightly out. And now if I do this, you'll see that.
Oh, I see it moving. Yeah.
You see it moving over here. So now what it worked out to is instead of doing the 367, I'm going to go $12 out more. I'm going to go to the 380. But watch this. Let me show you something now. I go one more. The difference of that little loss will make up from the bid-ask spread. We'll see that in just a second. But so now if I do this, let me go big with this and show you what's set up here. If I were to hold the stock, it would have to go all the way back up to where I bought it, right? Which was at that what I said that was where I buy the stock at. That was at the 450, whatever that was. Yep. So and then but by doing this, now As the stock starts to go up into the spread, what's happening, and mind you, when I did this trade, it didn't cost me to do because I'm using the money from one to pay for the other. But now as it goes up in this space here, what happens is I make the money on the stock, plus I make the money on the bull call spread. That cost me nothing to do because I used the out of the money call that I sold against the stock to pay for my vertical spread.
Rance, this is real advanced. I'm trying to understand.
Let me break it down. Really simple. There's a really simple thing on it. If the stock, wherever the stock's at, doesn't matter if it's profit, not whatever, wherever the stock is today, if you were to buy the stock, you're going to make $1 for every dollar the stock goes up.
Right.
Right. If I were to do a bull call spread through the spread, I'm going to make $1 for, we're talking expiration number from them. I'll keep it simple.
Right.
An expiration number, every dollar the stock goes up through the spread up until the upper strike, I also bring in $1.
I'm just having a hard time understanding conceptually how the trajectory has like increased. The angle of profitability, if you could say, has gotten steeper. How did that happen?
Because I have a bull call spread. Right. I have a bull call spread. Right. So if I were to let's and I appreciate this because I know this is a little complicated concept, but
this is a deep one. I like it.
It's a deep one, but it's a really powerful way to approach this. So if I clear this for just a second, and
I'm not
have
taking additional risk because I sold the 2 calls.
Say that again.
And I'm not taking any additional risk because I sold the 2 calls.
Yep. So if you bought, so forget anything about the picture of the risk graph and the amped up thing and all that. Let's just break it down.
Sure.
If I did a bull call spread, and again, we have to, for this to keep it simple, we're talking about expiration numbers. If I did a bull call spread and I got the bull call spread for free, I didn't pay for it. Every dollar the stock goes above my lower strike, I make $1, right? Up to the upper strike.
Right.
So, and if I own the stock, every dollar the stock goes up, I make $1. So now what's happening is I have a bull call spread on that makes $1 for every dollar the stock goes up. And I own the stock that makes $1 for every dollar the stock goes up. So every dollar the stock goes up, I'm making $2.
Mm-hmm.
I see. Okay.
And
my first thought looking at this is like, that doesn't make sense to me because you're doing exactly that. You're making more than a 1-for-1 here, but because you're making 2-for-1
right
with this setup.
Yeah.
And there's one more piece, right?
Yep.
And there's more.
Magic wand.
Yep.
Yes. Come back.
So the fact that you have the bull call spread making you money for free, because you didn't pay for it, because you used the out of the money call from the covered call of the stock to cover the cost of your bull call spread. So now every dollar the stock goes up, you're able to make money, make 2-for-1 up to a point. Because don't forget, now you did an out of the money bull call, out of the money covered call. So when it hits that strike, you can't make any more money. You're gonna cap out at that point in time because I sold the call. But if I look at this, the difference between this is if the stock gets up to $4.15, I'm going to be at the same place as if I held on to the stock until the stock got up to $4.51.
Yeah, I understand. I mean, you brought in your break-even point by $25 or whatever it is.
Yeah, right. Exactly. I brought my break-even point down by a substantial amount because of the fact it was actually 35, by the way. I had to look at the math too, but I dropped my break-even point by $35 by doing this, and it cost me nothing to do. Now,
how's that legal?
You know, I'll tell you, it's a really cool strategy that I actually learned this from I don't know if you know John Nigerian.
On CNBC all the time.
Yep, all the time, right? Back when he was floor trader, I had met him years ago, and this was a lunch conversation I had with him, and he showed me how to do this. And I was like, "That's pretty awesome, man." I've
never heard of this before. And what'd you call this? A stock?
I called this the SOS trade, right? So the stock goes down, you're freaking out. SOS, stock option spread, because what you do, you have the stock, and I'm now doing an option spread. In this case, the bullish vertical, right? The bullish call vertical or bull call spread. And I'm paying for the bull call spread by using the money from the out of the money covered call on the stock. And the thing is, people say, well, yeah, but then it caps out your gain. Well, if you still like it, go back in, right? Whatever, you can still go, but now I'm back to whole $35 lower than I would be if I just continue to hold the stock.
What if you did this like week over week? Because this looks to me like it has negative theta versus positive theta. But if you're taking in a credit on the trade overall, then you're not losing out.
Right. Yep. You're correct. So you could absolutely do this. So there's a lot of what, we already talked about this a little bit to wrap your head around, right? So the challenge we have here is that in order to do this, trying to get this off in a few minutes in a podcast and have people understand it. The idea here is get the concept and then let's go find out how it is, because you can absolutely, I'm not sure what it's called elsewhere. I've always called it the SOS trade because people are freaking out about their stock going down and it's this combination of a stock and option spread. But,
I just love the fact that like, if you still have a bullish bias to the stock, this is not like the protective put we talked about in the last episode. This is, hey, I want to try and bring in my break-even point because I still have a bullish thesis on the stock. I'm not worried about the other way. I feel at this point we are going to go up. And by doing this, I can bring in my break-even point by $35 in this example.
Right.
This is really interesting.
Generally speaking, when you do this, whatever if you do this right, what you want to do is you want to get to break even halfway back up. Right. So simple numbers, if it goes from 100 down to 80, by the time it gets to 90, I'm whole again. Right. That's the idea behind this. And so then I'm whole. And if I still like it, I want to stay, do your trade. But in the meantime, you fixed what you were instead of having to wait till it gets all the way up to that, in this case, 451, in this case, to be at 415 instead of 451. That's a big difference to get back to break even.
Right.
Now, I do want to mention, because you bring this up, and it always comes up as a question here. Well, wait a minute, that was a repair. Do I have to repair it?
Why not just cut your losses, right?
Well,
that's my thought.
That you can do that. But if you really feel like it's coming back up, you can do this repair. But you know what? You can also do this as an entry trade. I don't have to do this as a repair. I can do it as an entry trade, and to do that, that's the trade right now. So I just went back to Facebook that I'm not in right this second. You go buy Facebook today, go buy a call at the money, go as far as you can out of the money. That 2 out of the money calls will pay for the call you're buying. And now that's what you got as as your risk graph for the trade. And if I were to compare that to just buying the stock, that's the difference between the two.
Well, not only that, but like because lots of people love a covered call. It's like a double cover call.
Well, it's a race to get. I mean, you're going to make money twice as fast up to a point.
Right.
That's really cool too. I'm just saying. I mean, if you are a cover call kind of person, this is a double cover call.
Right. It's using the premium from the covered call to get to basically own a free call spread to make money on that movement.
Why don't people know this, Rance? I mean, if you're giving me an option like a cover call that makes money twice as fast, and I love a cover call anyway,
right?
Why doesn't anybody know this?
Well, we're trying to get the message out. I will tell you there is one difference, because in a covered call, if the stock doesn't move, I still bring in the premium. Right. This case, I do want it to move, so I have to have a small bullish bias versus stagnant. But most people going on a covered call already have a bullish bias. They wouldn't do it in the first case because I don't want the risk of the stock, right? So this is a way to amp that return up even more. It's a really cool strategy to do.
This is cool, Rance.
Chris,
I'm flattered to have you on and going through all this. This is cool.
So
one other thing. Just Chris, to answer your question, why does nobody know this? Okay, this is part of why we've built the platform that we have, because even if you go to most brokerage platforms, are they showing you visually this? Right?
No, that's what I was talking about earlier. Like I had one years ago that did, but I've been searching for literally this right here, where I could plot out my trade before I entered it instead of after I entered it.
And most broker platforms, they're going to give you pricing. They're going to give you a put call chain. They might have a little more than that, but they're not going to give you this level of visual detail. And obviously, when you see it visually, it makes a lot more sense, right? If I tried to talk to you about this without the platform, you would still be scratching your head. I mean, just straight up, right? So that's why people don't know, is because there's not enough options platforms out there that can make this a visual process for the people.
This is cool.
But by the way, the other cool thing about this is I can look at 3 trades, We have two on here. Let me keep it simple. We'll just go with the
like
two.
three different ideas that you're
Right.
like mulling around.
Yeah, right. So I've got like I buy the stock. I could look at a bull call spread. I could look at this trade we just talked about. I can compare all three of them, and that any trade I do, I can just take a snapshot of it, right, and look at it. So I took a snapshot of that trade, and now I've got the stock itself is a comparison here. So we're just going to do these two, and I can sit here and look at, okay, this is the cost of the one, this is the cost of the other. I decide which one I want to do, and then you select it. Like if I like this one better, the one with the spread, all I have to do then is go click the with that one selected, go click the trade button, and it fills in the ticket for you with everything you need to be able to go do that trade.
I'm shaking my head in disbelief.
So literally you compare three trades together, pick the one you want, hit the trade button, fills it in, ready to go. So it's a pretty cool way to be able to do this. And again, we saw earlier where I was moving it up and down, based on my little rolling icons here, where I can move the trade around and optimize its position and all that. It's a pretty cool thing to be able to do. So now I'd like to open up time-wise. I won't be able to go to the whole concept here, but I would like to just mention a little bit about, we're talking about stock. Well, a couple weeks ago, we talked about Roku in a bull call spread. Mm-hmm. So what happens so we talked about what is a stock thing. Well, I just want to show you real quick here. If let me switch account thing real quick here, do this. And I want to bring up my bull call spread that we actually did on this. And I know sometimes in the sharing, it takes a second. Yeah, there we go. I had a little, I did, on Skype, it causes a little tiny bit of a latency in some of the click here. So I need to just go that one more time.
Yeah, no worries.
So what I want to show here is the trade. And, it didn't work out exactly how I had anticipated. Although we still have plenty of time. It's not a problem. I just want to show there's something you can do with this if you want.
Will it be magical as well?
Yeah, it will.
Man, I can't wait.
Although we seem to be a little. There we go.
It's a different type of wand, but it's
a different type of wand, right?
So it's like Harry Potter kind of magic versus like Star Wars Jedi kind of magic.
There you go.
Right?
There you go. Right. Yeah.
My wife cannot stand how nerdy I get around here. My kids are into it, but my wife's like, nah, we don't do that.
We were talking about putting things behind me on my wall here and what we should do with that. And I was like, wait, the things that I have, because I'm a little geeked out in that, between those kind of things and having a 3D printer, usually I have a 3D printer project going on.
I just got a 3D printer. I kid you not. It's on the other side of my monitors here.
Really? That's
yeah.
Okay,
oh, man. How funny.
While I'm pulling this up, just got to ask, what brand?
I got the Ender 3 version 2.
Okay.
You know that one?
Yeah, I am very. Yep. Yes. Yep.
I got that one mainly because like that seems to be like a really common one, and I was like, I'm not going to get some obscure knockoff. Like, I want to make sure that when I go into forums to look for help, like people are talking about it already.
Yep. So I happen to get the Snapmaker because Snapmaker is also a CNC and a laser, so it's a laser cutter thing. So
yeah.
So I'm having
to rebrand this podcast to like the exceptional nerd podcast,
right?
Who happen to talk about stocks.
I am having and I'm seeing my network tab thing here with the Zoom. It's caused me a little bit of a problem. Let me take one last hit at the. Oh, wait a minute. Let's do the. I'm in the Prime Virtual. I'm just having a little connectivity issue with our session going on. Yeah, and it's. Let me see if I did positions. Make sure I got it in the right account. Roku. There we go. All right. So, and so what we can, this is like, let me just tell you that. So what I can do here is I'm going to share two ideas. One is I was in a bull call spread and now my viewpoint changed and I'm now bearish.
Oh,
so I'm going to show
that's
that
a
I
big
can,
change.
Yep. I can flip this. And I'm going to tell you something. I apologize. We're having a connectivity issue and I'm having trouble getting that up. But what the idea behind it here is that, let's say if I'm in, let's take the 390, 400 as an example here. If I'm in this trade, and if I do this, I'll just go one more try here, and we'll see if we can get.
Yeah,
this.
I do want
and
this to come
platform.
through
It's
because I'm
not
interested.
platform.
Because like imagine you're like a long short person, right? If something's above a trend line, you're going to go long. If something's below a trend line, you can go short. And that sounds to me like something easy to flip in this way might be something you could do.
Yes, exactly. So,
Okay, you got my
in
answers
this, I'm going to take the position I'm in, and man, I love the fact that there we go. All right. So here's my position. Thanks. There we go. So here's the position I'm in. I'm currently in the 410, 430. And when I look at my chain, by the way, it flags it for me. So I know exactly where I'm at.
So hang on. We're looking at out of the money call spreads. No
Right.
stock, just out of the money.
No stock. I'm just in a bull call spread. It's a call spread. I'm in the 410, 430.
Okay.
And the stock pulled back and it's now at 389.
Right. So this has no chance of profiting right now.
Right now,
Gotcha.
now I'm out to April. Remember, I said always buy more time than you think you need, right?
Right.
So I've got a possibility, but right now
it's
not looking good, right?
Right. Yeah.
So if my viewpoint is that this now has changed and I'm bearish,
okay,
what I can do is I'm going to go buy back my. This is the 430 call. I'm short. The little red arrow means I sold it, right? If I look over here, I can see it. I'm short it. So I'm going to go buy that back. That's going to cost me $36.
So you're going to close that.
But then what I'm going to do is I'm going to flip this around and I'm going to do the same spread, 410, 430, $20 spread. I'm going to go 410, 390. Now that one, I'm going to bring in $49, right? So I'm going to bring in a huge chunk on that one and see what it did to my position.
That did flip it. What did that do to your risk? Like your capital in the trade?
What happened is this was out getting between spread and a bit. It did add a little bit of money to the trade. So I'm not going to, I don't want to, that's one of the things about exiting is always an option. Don't go letting the tail wag the dog, right? Don't do chasing this. Make a decision. But if it really looks like, hey, it broke through a support level, it's breaking down and we want to flip it, we can do this. And it does add some cost to the trade. But now, if you look at this, now I'm in a bear call and all it has to do is stay here or go lower and I'm going to bring in the money, right? Because that's where the stock is today. So I can still profit from this even if it doesn't go up at all or go down anymore, right? If it just stays here, I'm still going to be able to profit from it. And if it goes down, of course, I still have that profit ability as well. And so, just to show that, if I were to, let me take my snapshot here again. And now if I flip it with the snapshot so you can see that, you could see more of how that's going to take it. So it does change the profit, the risk factor a little bit. So again, don't do it unless you're really confident that's going to work, but it is going to continue going down. But if you really have that being the case, you can absolutely repair that. And then one other way, so I talk about that one. There's one other one I want to share with you that I'm bullish, but I'm bullish from this lower point, right? So it's pulled back, but I really do think it's going to go up. But I don't like the fact that I'm all the way up here at the 410, 430. So watch this one here. I'm again taking my, let me go take a clean snapshot of it.
So you're saying maybe it reaches a point where you feel that it's support and it's going to go up from here.
Correct.
Okay.
Yep. So now I'm going to take my snapshot and then I'm going to come over here. Same thing. And this one, what I'm going to do is I'm going to buy. I'm going to lay an inverted butterfly on top of this. That's what it is. But let me just tell you what I'm going to do. And it's really easy to follow this because whatever I sold before, I'm going to buy. Whatever I bought before, I'm going to sell twice.
So you're closing out one and opening up another.
And then I'm going to go down here. And whatever that spread was, I'm going to go down here and buy that. Now, what that just did for me was it put me in a situation where now, again, I have a little bit more in the trade. So again, it does put more money in the trade. I will tell you that one of the things about a four-legged, and if we had talked a little bit ago about you doing some condor stuff, you can get, when you're doing a four-leg, because of what it does for the market maker, you can absolutely get a lot better in the spread. Right.
Yeah, and you can hit the mids a lot easier.
Yeah, right. You can hit the mids a lot easier. And we're talking about here, each of these options, right? And you got four of them because you got two of this one are over $1 spread. So you got a $4+ spread going on here, almost a $5 spread. So if you got into that, it's going to make a big difference. It could reduce the cost of this trade by almost half by getting in between the spread because this is all done at the natural. But what it does now is instead of being in this, that higher strike, the 410, 430. Right. Now I'm in 390, 410. Right.
So scroll back down for me so I can see the visual. So we were in the red one and we're considering going to the blue one, which pulls in our profit break-even points.
Well, it does adds a little bit more money to the trade, but it reduces my break-even point by about, in this particular case, about $15.
Yeah, I'm seeing that.
Right. Yep. So my break-even point.
So it's kind of like what we talked about earlier with your SOS strategy, right?
Right.
But now we don't have stock involved. We're all
right. We're just all options, right? I start with stock, even though I know it's a little complex to get the concept. I start with stock because it's a lot of people can relate to it a little bit better. But when you look at this from here, where I had a 418, now it's just on this, just rolling the bull call spread that down. I go from a 418 break even, literally down to a 402 break even. So I'm bringing it down by $16, dropping my break even point on this. And that's without working to get between the spread, because I know I can get probably another $2 off of that break even point by working the spread.
So we started with the bull call spread, and we're basically rolling down to another bull call spread. Am I correct?
We are exactly rolling down the bull call spread. Yep. It's just a roll down in this case, and you're doing it by putting an inverted butterfly on top of it. Is literally what you're doing.
Oh, okay. Right? Now I understand what you mean by the invert, because I see the 1-2-1.
Well, actually, I'm sorry. I said inverted. My mistake. It's just a regular butterfly. Sell the body, buy the wings. Right.
Yeah.
Right. So this is actually, I'm putting a butterfly on top of my current bull call. Okay. Right? I said it right. Yeah. So I was thinking the put side, but yeah, on this side, I'm literally just putting a butterfly on this, and the strike I'm selling is the strike I'm long in my bull call spread. And then you go out and you buy the wings, and that rolls the whole thing down by literally the amount of the spread plus whatever the cost is. So in this case, literally about $16 drop in the break even point in the trade.
So let's talk about the scenario of this. I'm long. This is Roku. I'm long Roku. Things didn't work out. I still want to be long Roku. I can repair it to be in this way to where my break even on Roku comes in. I think you're saying $15 there. I'm taking a little more risk. I understand that by doing this, I'm taking more risk. But if Roku does bounce back like I want it to, I still have a bullish thesis. I'm going to make my money back faster. Not as much, but I'll make it back faster.
Right. Yep.
Got it.
I'd rather make it back. I mean, look, there's a higher probability the stock's going to hit 403 than it's going to hit 418. Right. So, and by the way, it's a $15. You're going to be about $16, $17 drop by the time you get between your spread. Realistically, about a $17 reduction in your break even point in the trade. And you're not going to make as much, but you're going to make it quicker. And then if you still like the trade from there, fine, take this one off and go put another one on. I mean, it's, I've had times where I remember several years ago in Cisco, I was in 4 back to back. I rolled it and took money, because you can also, if it goes up, there's another way you can roll it, where if it goes up, you can roll it up to a higher one, take money off the table and continue to run it. Right. And that same thing, I did that like 4 times or 5 times on Cisco. I've done it on quite a few stocks that way. And it's a really powerful way to continue to ride the trend. And we even talked about, when we talked about bull call spread a few weeks ago, we talked about, hey, if it goes up, don't say that's not the end of your trade. Take that off and put it on again. Right. But there's ways to do it in a combination to get even better pricing and all that in your trade. So here's the thing I want to really make the point on here as we're talking about this, is that we talk about this, we talk about the covered call. I didn't really go into that much on the covered call adjustment. Sometimes I get into that, but we talked about flipping the bull call to a bear call. We also talked about rolling it down so I can do that. Here's the thing about it. Once you've made the trade, once you got in a trade, you just want to look at your stuff as inventory, right? Mm-hmm. I started out as a bull call spread. Doesn't mean I have to stay in a bull call spread.
Right.
And one of it's a simple adjustment. That's not what I do very often, but if it pulls back, I could just buy back my short call for cheap. And if it comes back up, my long call could make money quicker, right? That's a possibility. That's an adjustment. If you follow that, I'm in my vertical spread, drops, buy back my upper strike for cheap, the one I sold. And now if it comes back, my lower strike may not ever get to where it was, but I can still make money because I don't have my upper strike working against me.
Yes.
Right? So there's other ways so the big thing is, I know 11 different ways to fix a bull call spread. This is adjust, because some of them are profit taking. But the thing I want to really get across here is, it's just inventory. What can I do with what I got? Just like if I have a stock and it goes up and it kind of looks like it's topping for a little bit, that might be a good time to sell a covered call. Well, you start out with a stock, now you're in a covered call, right?
So, Rance, let me ask you a philosophical question. All right, this is something that I struggled with for a long time. if a stock is working for me, all is good. I'm going to take my position. I'm going to roll it out. I'm going to keep it going like you talked about there, right? I mean, essentially, you could roll put spreads basically forever if the stock continues to go up.
Yep.
At what point would you, as a trader, decide, you know what, I want to get out versus I want to keep trying to repair this trade?
So the answer to that really is
well, let's answer the answer. Your opinion. That's really what I'm looking for here.
My opinion.
Yeah.
When I no longer have a clear outlook, right? That's the hardest to me. The hardest market to trade is shifting sands, right? When you're not sure, is it going to go up? Is it going to go down? Is it like, what's happening? But once you have a clear, I don't care whether it's bullish, bearish, stagnant. Once you have a clear outlook and you have, and that can be market driven, but it's also a lot of times stock driven, right? Like we've talked about the COVID stocks that were benefiting that are starting to lose some of their luster, like Zoom, right? So because there's now light at the end of the tunnel, right? So it might still be 6 months out, whatever, but it's still, there's light there. So if you don't know what's going to happen, if you don't have a good outlook of what's going to happen, that's when I cut. Whether win, lose, draw, whatever, cut. But if I really feel like there's an opportunity here, and I now have a reason to have a clear outlook in a direction there, that's something that then I'm going to do. And one of the cool things that we haven't talked about these kind of things, but we have a scoring system that looks at technical analysis, what the institutions and insiders are doing, how the stock is valued, and what's going on with fundamentals, and those kind of things on this to help us weigh out. And there's also in-depth analysis you can do on it to get an educated decision together on a stock. But if I don't know, I'm going to get out. Now, I will tell you though, one little thing on this. When we were developing the platform, we didn't have virtual accounts and all that ready yet. And so we were doing all the testing with real accounts. We do one lots and stuff, but we wouldn't be trading on $3,000 stocks, but we would be doing a lot of the testing for real on this. And a lot of times things would fill, and the tester, the staff, they weren't considering, they didn't want them to fill, but a lot of times they did. And so what I did was I took it as a personal challenge that every time one of those filled, I wanted to fix it. I wanted to make sure that whatever happened with it, I exited that trade profitably, no matter what went on. So I didn't have the choice of the stock I got into. I just had the choice of how I dealt with it when we were in there. And it was a very, very powerful experience because I learned the flexibility, but I also learned there's times where you can't do it. And, and I was director of options trading at TD Ameritrade for about 4 years. And we saw people start to adjust. And they just got themselves in where now they've got a guaranteed locked in loss that there's no way to get out of. And so you definitely don't want to do that. You want to weigh it out, make a right decision. But, and I'll tell you, one of the great things about this is you get the platform, you get a $100,000 virtual account to go trade with.
Hey, cool.
Yeah, it's right. We have virtual trading.
I've been looking for a place to paper trade. I had no idea it was in there.
Yep, we have paper trading accounts. When you go to open up account, you just choose the virtual account, and you got $100,000 to play with. You can actually have up to 4 of those in the platform. And one of the things that's kind of cool to do is go throw a bunch of stuff at the wall and then go work it. Right, go work it, because if you can learn how to weather those things. It's like I'm a pilot and I learned how to fly in Ohio with, some pretty hefty winters and all that stuff. Then I lived in Florida for a long time. And other than the thunder bumpers in the summer, it's really easy flying. Well, people that knew my experience of the North were more comfortable with me as the pilot than people that didn't have that experience because, you knew how to weather the storm. And by having that experience here of putting on some things that don't go well, and even if you cut your losses, you might want to see if you can track your way through to see, would there be a way I could have gotten out of this, and use it as a learning experience. And again, because of the virtual account and because of the journaling capability and all that within the platform, it gives you a great chance to be able to do that. And, you can tag it as by the way, if you do an adjustment on a trade, it automatically tags as an adjustment and tracks through as a trade that you did on adjustment. You can see how you're doing on your adjustments. And if your adjustments are losing you money, it's then you're doing the wrong things there, right? So it's a great way to be able to track that as well. So,
wow.
The thing I just want to get across is just because you're in a trade that went the wrong way on you doesn't mean that you have to accept that as a loss. Sometimes cutting your losses is the right thing to do. But if you have a clear outlook from this point, wherever it's moved to, look at how you can take advantage of that opportunity.
Yeah. Wow. This was super educational. Rance, I love having you guys on, both of you guys, to come on and to share this with me. In fact, I was joking with Rance before the show because, he's been around the block, I'm going to guess 2 to 3 years more than me, probably not more than that. And, right now it's like on the Wall Street bets, it's like Main Street versus the Suits. And I was calling them the Suits. And he's like, I'm not one of the Suits. Stop it.
Yeah, I think it's kind of funny that you had all these guys, it really is kind of amusing to see the hedge funds crying about market manipulation by crowdsourcing when, so it's by crowdsourcing versus big money.
Yeah.
But come on, they're doing this stuff all the time. Betting on GameStop going down, shorting GameStop because I think it's going to go, that's to some levels market manipulation and stuff, and all of a sudden these crowdsourcing pulling it out causes one firm was what $3.8 billion on it.
Hey, let me ask you this. I had seen some, because I've been obviously watching as this goes on. I had seen something that I think is misinformation, and I want to ask you because I think you're going to know. They're saying that something like AMC or GameStop or whoever is short, they have until options expiration day to cover their shorts. And if they don't, then they have to buy back all the stocks. And I'm like, I don't feel that that's right. I don't think it has anything to do with it because they can hold that short forever, right?
They can. What the challenge is, if you're $3.8 billion upside down, what's your cap requirement, right? If you or I shorted a stock and it went up, there's going to be a point in time where we're going to get margin called to bring in more money. Right. And so there's a limit that they can on how, and that has nothing to do with options. And Chris Mercer here, speak in on this if you can, on this from your experience with the brokerage side and all that. You've been with multiple brokerage firms in the past. Options there's nothing around that has anything to do with directly with how you have to get out of a short position, right?
No, not at all.
Yeah, I didn't think so. And I was so confused because I'm like, why are they spreading this? Like, I don't see how options expiration has anything to do with these short shares. I mean, they're like two different beasts we're talking about.
Completely. Yep.
Okay.
Now, if you're short options betting on something that way, then you have obviously but that's not what we were talking about there.
No.
Right. No, they were short the stock expecting GameStop to go bankrupt eventually.
Right.
And I still think that's going to probably happen.
Yeah. And they can keep those short shares for as long as they want. I mean, they're going to pay interest on it or whatever.
Capital to
deep
cover
pockets.
Yeah. Right. If they've got a deep enough pocket to do it. And at some point in time, they might go, you know what? This is now affecting us in a way that we have, capital calls that we have, or whatever, that they decide that they have to cut their losses on it, which is, I believe, one of the things that happened with the hedge fund, the $3.8 billion.
Yeah, well, I got to tell you, I'm so glad I got to speak with somebody smarter than me about this because reading this, I'm like, I don't feel that this is correct. So good.
Yeah, what I will tell you about one of the things about Wall Street Bets is that there are some people on there who know what they're doing, and there's a lot of people that are really new to the game and ride this ride. And you have to, I mean, not that we haven't had a misinformation issue around, a whole bunch of different things in this, in recent times. And this is one of those you have to really watch that you know what you're doing. And there's great resources like yourself and different people about how the markets work. Educate yourself on it. Be careful taking one guy's opinion off of subreddit. Make sure that you really know what it is.
Yeah, and not only that, like I saw that. Now, obviously, I'm new to the community there as well. I saw it was like 1.5 million people a couple weeks ago, and now it's over 6 million. So you got a lot more opinions in there than there used to be. So. Right. Interesting to watch.
It is. It's an interesting, and the thing is, how many of those people are, really new to the market that are jumping in because they have this great opportunity. They think this is a great opportunity. And the problem is people that are late to the party are going to get burned.
Yeah,
right?
big
The
time.
people buying at the top are going to get hurt, and and then there's going to be more uprising about that, and all. But that's that's about knowing what you're doing in it, and don't leverage yourself. Somebody talking about putting out all of your wealth in it, because these are super great opportunities. Right now at GameStop at the numbers it's at, I don't know that that's a great opportunity. And even we talk about AMC. Look, they got some problems. And I mean, empty, by the way, a couple months ago, I rented out an entire theater to go watch Tenet. Me and two of my friends.
Oh yeah.
Rented the theater now. It sounds really cool. It cost me $150 because they didn't have.
Yeah,
right?
I saw some specials like that. It's like do a private screening for $100 or something.
Yep.
That's really cool. Honestly,
I'm in the Bay Area, and here it was 150, but it was still
it's like California tax.
Right? Yeah, right. But
I'm surprised the governor lets you out of your house to go do it. I'm just saying. I don't know.
Right. So anyway, that's it is kind of an interesting thing right now with what's going on in the markets. AMC definitely has a hard road in front of them. They may end up filing bankruptcy in the process because they need to get rid of some of the leases and debt that they have. And here's the one thing that you need to know: if a company does that, it doesn't mean the company goes away. It means a reorganization. But where are you as a stockholder? I've had people say, well, you're kind of at the end of the line for, no. You're the guy holding the door open for the end of the line to go into court to ask for money from the bankruptcy. You get wiped out. So as high as GameStop is, if GameStop files bankruptcy, because the fundamentals of the company is nothing, it will go to zero. And if you own the stock, you don't have anything afterwards. So just be aware of that. It's a risk factor you have to watch.
Well, let me add one other thing to this too, is that right now the conversation seems to be about we're taking down the man, right? We're taking down these professional short hedge funds and
guys like you in suits.
As
I'm the one in the suit jacket.
Right. But the thing you gotta right. But you gotta remember the thing, like that's the argument right now. It's like, okay, there's short people and then these other guys that are winning, right? And they're beating them and they're hurting them by running these stock prices up through crowdfunding. But here's the thing that nobody's talking about. Okay. And this is probably who's really behind all this stuff. The real winners are all the actual longtime shareholders and board members who are now probably, you're going to find after the fact, selling these stocks at prices they never could have imagined, because these companies are all in danger of going bankruptcy past COVID, and probably most of them will. And this is giving them all an opportunity to take huge amounts of profits out the table that they probably were not. So that's not being put in the conversation. But if you're trying to fight the man, you just put a lot of money in insider pockets right here.
Well, I actually have a friend of mine who texted me a couple days ago. He's like, hey, we need to talk. And I'm like, okay. And he goes, I bought GameStop and AMC like years ago, and I never expected this, and I don't know what to do. So yeah, people exactly like that, Yep. I was so happy for him, really, because it's like a windfall that he never in his life expected. And he was texting me today. He's like, I just sold half of it, at 370. And I was like, dude, you got to go out and treat yourself tonight. You did good.
Right. Yep.
Right.
Yep.
So, I know a college student that's waiting for it to get to 500 so he can pay off his student loan. Maybe.
But then you got to pay taxes too. And I think that I'm a little worried about people who are viewing this as free money, because at the end of the day, they're going to have to pay that capital gains tax, and they're going to not know what to do a year from now.
It's actually, if they're doing the short term, it's even worse, because it's going to be ordinary income, not capital gain, because they didn't hold it long enough to qualify for capital
fair
gain,
point.
right?
Yeah.
So that's a piece that can really bite you on it if you're not careful. So beware in those things, guys. It can be fun. Not saying don't have fun with it, but just be careful what you have in it, because you can get bit at the end of the day.
Right. And you know what? Let's get back on topic here. Let's send everybody to marketgear.com/Chris Uhl. You just got to see a whole heap and helping, as we say here in Texas, a whole heap and helping of demos. And you probably could tell that there were several things that I actually am really excited about. So I got to get in there and start learning it myself. Head to marketgear.com/Chris Uhl to get 2 weeks free, plus 50% off your first month of the Market Gear platform that we've been talking about and showcasing here today. And thank you guys for coming on, learning us all this stuff, as we say here in Texas as well. You would think that people here in Texas don't know what we're doing, and half the time you may be right. But in the process, I really appreciate you guys coming on, teaching us something. And really, I have got so much information from talking to you, and I can't wait to have you back on so I can learn even more, because the podcast is half for selfish reasons. I get to learn from you guys and share it with others.
Well, glad to be able to be here. Look forward to being able to do this again in the future.
Okay, so what'd you think? That was pretty incredible, right? Now, if you like that, that's only a taste, only a sample of what you're going to find in the full AI stock trading system. And I really highly encourage you to go and check this out. Obviously, you are interested in learning on how to trade, and that's why you're listening to this podcast. Now, I'm going to take and download my entire trading system that I use day in and day out onto you. And the only way I'm going to be able to do that is over at the AIStockTradingSystem.com. You're going to get phase 1, 2, and 3, several bonuses, and on top of that, I'm going to walk you through over a dozen trades that I put on inside of my account, holding your hand and showing you exactly how I got in, how I got out, how I use the artificial intelligence data, and how this could work inside of your own trading portfolio on a daily basis. So make sure you head on over to AIStockTradingSystem.com. That's AIStockTradingSystem.com to learn more and to get started and to download my decade plus worth of trading experience into your hands so you can start using the AI stock trading system today, the 5-step system to take the guesswork out of trading. Hey, if you like this video, let me know by leaving me a like below, and then subscribe and share it with somebody you think could use it as well. Be sure to comment below with your biggest takeaway from this episode and any suggestions you have for future episodes. And finally, make sure you watch these other videos to help you trade faster and trade smarter, and I'll see you on the next episode.